How's it going, guys? Bill here. I just wanted to do a little video to go over Airbnb. As you remember, I am a big fan of Airbnb, and it's been hit kind of hard, just like most other growth stocks have been lately. Just wanted to kind of share, my thoughts on it and show you a few things and let you know that I still believe as strongly as ever in it. I believe right now that it's an absolute bargain right now. It's been from after it had its last earnings report, it killed earnings. It did everything you wanted it to do and then some, and it skyrocketed after that. But then here in the last month or so, with everything that's been going on, it's just got kind of caught up in this stock market drop. And it's dropped probably, 25-30%, something like that. Its highs were somewhere around 210, and I think today it closed around 160. So it's had a pretty good drop, but I believe that this is a great buying opportunity. I really do. I don't see the growth slowing down or stopping in this company for many, many, many years. It has a huge TAM. That's one of the things we'll mention. And it's just growing extremely fast, and it's becoming more and more profitable. It was devastated by COVID when the pandemic, when it first started, and as everything started opening back up, it started killing it once again. And I think that a lot of what's hurting it now is this Omicron variant has, the fear over that is taking its toll on this stock. But I really don't think it's going to affect it at all. And it's just a matter of time. This thing is going to take off, and there's going to be no end in sight. This thing is going to grow for years and years and years. And if you're smart enough to get into it, it's going to make you all kinds of money. Hey guys, real quick, do me a favor. Hit that thumbs up, subscribe for me, ring that notification bell, and leave a comment. Tell me what your thoughts are on Airbnb. You bullish, you bearish? What are your reasons for it? And let's get into this. The first thing we look at here is we see that Airbnb has a total addressable market, or a TAM, of 3.4 trillion, which is absolutely massive. And we see while it's impossible for a company to capture the entire TAM, Airbnb has gained significant traction in the boarding and lodging segment. It has, in fact, been at the forefront of the global shift in consumer behavior, as Airbnb now has 4 million people as hosts who rent out their houses to travelers all around the world. The pandemic has been harsh for companies part of the travel and hospitality sectors. Consumer spending fell off a cliff as borders were shut and travel came to a screeching halt. Airbnb increased sales from $2.56 billion in 2017 to $4.8 billion in 2019, so the growth was huge there. And then revenue then fell to $3.37 billion in 2020, obviously because of the pandemic, but has grown to $5.3 billion in the last 4 quarters, so it's recovering quite nicely. Airbnb collects a 14% service fee from guests and a 3% service fee from hosts. It already enjoys a first mover advantage and continues to expand the number of houses available on the Airbnb platform. The company successfully provides homeowners an opportunity to modernize their real estate inventory. On average, a host on Airbnb earns close to $8,000 a year, which is quite a huge amount in most parts of the world. While international travel remains subdued in 2021, the relaxation of COVID-19 related restrictions has resulted in strong demand across domestic routes. The accelerated shifts towards the work from home trend has acted as a massive tailwind for Airbnb in the past year. In fact, workplace flexibility will be a long-term driver for Airbnb, making it one of the top stocks right now. In Q3 of 2021, Airbnb reported sales of $2.2 billion, which was an increase of 36% compared to the same period in 2019. The company also managed to generate $1.6 billion in free cash flow in the last 12 months. Despite a negative free cash flow of $667 million in the December quarter of 2020. So that means in the other 3 quarters that the free cash flow was well over $2 billion alone. In case Airbnb's cash flows in 2021 touch $2.5 billion, it will be valued at a free cash flow to sales multiple of 40x, which is not too expensive given its growth estimates. Airbnb does not own any inventory and has an asset-light model, allowing it to benefit from high operating leverage. So a small uptick in revenue will enable Airbnb to increase profit margins significantly. While sales rose 36% in Q3 of 2021 compared to 2019, and we look at 19 instead of 20 because of the 2020 pandemic year, its net income more than tripled to $834 million in this period. Further, in 2019, its free cash flow stood at $194 million, and despite a negative figure in Q4 of 2020, Airbnb's metrics rose by 10x in the last year. Analysts expect sales to rise by 74.6% to $5.9 billion in 2021 and by 24% to $7.3 billion in 2022. Comparatively, its bottom line is forecast to improve from a loss per share of $15.63 to earnings of 93 cents in 2022. So it's about to turn profitable, and that's when things take off. Analysts tracking Airbnb stock have a 12-month average price target of $196, which is 35% above its current target price. And then here's a quick reminder of Q3 results here in 2021. According to its income statement, diluted earnings came in at $1.22 a share, up 239% versus last year. For the first 9 months of 21, Airbnb shaved its net loss to 67 cents per share versus a net loss of $2.64 from January to September 2020. Sales jumped a hefty 67% to $2.23 billion record, $2.23 billion, a quarterly record. Third quarter adjusted EBITDA, which is earnings before interest, tax, depreciation, and amortization, exploded 120% to $1.1 billion amid a 67% jump in revenue to $2.2 billion. Net income soared 280% to $834 million. On November 9th, the company unveiled the Airbnb 2021 winter release, highlighting 50-plus upgrades and innovations that make it even easier to host and support the ongoing travel revolution. Airbnb also noted long-term stays of 28 days or more remain the company's fastest growing category by tripling. It made up 20% of gross nights booked in the quarter. In a press release, the company noted that a significantly improved cost structure helped fuel a substantial improvement in adjusted EBITDA margin to 49%. That's up from 19% in the year-ago quarter. Airbnb is gaining traction with consumers because of its platform's convenience and selection. On Airbnb, folks can find small rooms or large homes, places to stay in large cities or small towns, and the lengths of stay vary from a couple of days to a couple of months. That's all in stark contrast to hotels, which usually offer only a few room options in far fewer locations. Airbnb gaining market share in the massive hotel and resort industry is great news for investors. In 2019, before the outbreak, Statista estimated the sector was worth $1.5 trillion in annual revenue. Of course, the pandemic slashed that overall market potential in 2020 to $610 billion, and it's only estimated to recover to $950 billion in 2021. That means there's plenty of room for travel to return to full strength, but Airbnb has already eclipsed its revenue total before the outbreak. Moreover, Airbnb's quarterly booking value of $11.9 billion highlights plenty of room for it to grow by gaining market share, in addition to the overall industry rebounding to levels from before the outbreak. Airbnb undoubtedly has excellent prospects over the next several years as the travel industry rebounds and Airbnb takes a larger share of the market. Its stock is currently trading at 52-week lows, which makes it more appealing as an investment. Looking at its price to free cash flow ratio of 62, it's at the lowest of the year. Moreover, looking at its price to sales ratio of 19.7, it's very near the year's lowest price. For those reasons and others, Airbnb could be one of the best stocks to own now as we head into 2022 and as the world recovers from COVID-19. And then here's one last thing I want to quickly look at. Rapidly rising free cash flow makes Airbnb look like a bargain. When Airbnb's business was devastated at the pandemic onset, management did not sit still. They improved the cost structure by reducing marketing, controlling variable expenses, and eliminating fixed costs where they could. As a result, when Airbnb's revenue rebounded above pre-pandemic levels, profits soared. Airbnb reported a net income of $834 million in Q3 compared to $267 million in the same quarter of 2019. Massive improvement. Moreover, robust profit growth is increasing free cash flow as well. In Q3, Airbnb's trailing 12-month free cash flow reached $1.6 billion. That's more than tenfold improvement from the $194 million at the same time in 2019. Considering all of that excellent progress, it's a little perplexing to see Airbnb's stock has not risen much faster, and it's only up 12% in 2021. Perhaps persistently high levels of COVID-19 infection are putting a lid on enthusiasm for Airbnb shares, which that's pretty obvious. Nevertheless, rapidly increasing free cash flow coupled with muted stock price gains has the stock selling at a relative bargain. Airbnb is trading at a price to free cash flow ratio of 62, near its lows all year. Investors looking for a great business selling at a bargain price have found one in Airbnb. So there you have it. I think that's pretty good evidence of how strong a stock this is. And, I just think it's for years and years to come going to be a great one to hold. So be strong, know what you have, know your company. And, if you believe in it, then this is a buy more opportunity for you. So that's about all I have for you. You do me a favor. Give me a like, hit that thumbs up. How about a subscribe? Ring that notification bell and leave a comment. Tell me what you think about Airbnb. You think it's something to hold for the future? Do you disagree with me? What are your thoughts on it? Is there something I missed? Tell me about it. What do you think? And until next time, you guys have a great night.